Hello everyone, this is the pre-market report video for today 30th November 2023 for the Indian stock market in terms of Nifty and Bank Nifty. First, let's look at last night US market. Then I like to highlight why yesterday Indian banks were very positive, followed by usual some Indian major stock related info, summary and technical. Let's get started. Day before yesterday, on Tuesday night, after the US market closed, one of the important Fed FOMC member called Christopher Wallace gave an interview. In that he said if inflation moves to below 2% target, then we can expect the rate cut as soon as March itself. Regular viewers knows this. Before yesterday, market was positive for last whole month on the expectation of rate cut cycle starting from May month. Now, what he suggested was not May rather than March itself. So this was like a Goldilocks scenario. Economy is doing good and we can expect the rate cut as early as then what market was thinking, which in turn improved the global momentum massively. Because of that statement, US futures increased 0.5 to 1% and 10-year bond yield dropped to 4.25%. And hence, US spot market also opened hugely positive. However, last night, another FOMC member, Richmond's Fed President Thomas Barkin, he expressed skepticism and said if inflation haven't cooled means then he think there will be high possible for another 25 basis point increase in the interest rate. This mixed comments erased the initial gain. Then at 2 p.m. Eastern Time, Fed released the US Beige Book. Just for info, US Beige Book is the report released by Fed 8 times per year. It consists of all the information related to current economic conditions by US district-wise and sector-wise and future projections for next 6 to 12 months. So it always carries weightage and the next release is on January 17th. Anyway, in that they mentioned and expecting massive decline in economic growth and demand. On the positive side, they also highlighted the massive slowdown of inflation as well. But that didn't matter. As soon as this report was released, US market erased all its gain. At the end, Dow Jones alone increased that to marginal by 0.04%, S&P 500 decreased marginal 0.09% and Nasdaq down by 0.16%. So in the last 4 trading sessions, US market haven't moved at all. Today, as we discussed a lot of times, it's OPEC plus meeting to discuss about the oil production cut for 2024. So that in addition, this US new rate cut possibility both increased the oil price by 1.5 to 2%. But this is what I am thinking. This info I missed to share in the last week's pre-market. At present in the world, Venezuela is the largest oil proven resource country who got the oil natural resource of over 300 billion barrels worth. 50 billion barrels more than Saudi Arabia. However, so far because of US sanction, at present their oil production accounts only for 0.7% in total world production. In contrast, US, Saudi and Russia, those three each accounts for more than or around 10%. You might ask me why I am telling all this today. To answer that, last week US lifted the sanction, meaning Venezuela can supply oil to anyone. So far, their only customer is private Chinese companies, which they enjoyed around 20% cheaper price. Now, because of this lifted sanction, those oil shipment to China already rerouted to India. Hence, I don't think OPEC Plus will announce any more oil production cut today or tomorrow since they don't have that luxury. Again, this is just my opinion. I may be wrong as well. And also, lot of times earlier, OPEC Plus countries just announced the oil production cut, but in reality, they haven't implemented those. So they might follow the same pattern now also. Anyway, at the time of this video, Brent crude is trading around $83 per barrel and WTI crude is trading at $78 per barrel. Coming to Indian ADR, both bank stocks closed positive, whereas IT closed mixed. However, if you see the arbitrage, Infosys, Wipro and ICICI Bank all at present flat to negative. Only HDFC Bank got the difference of 7.7%. As we know, after the merger, it always got at least 7% difference. Based on those, I'm guessing 0.7 to 1% positive. About Gift Nifty, today early morning it closed at 20,105. Today is the expiry day, so I'm expecting no premium. Based on that, for now, it's indicating flat to negative 40 points opening. So those were the things happened yesterday and last night in the global market. Now let's look at the India specific information. As most of us know, yesterday Nifty increased over 200 points in one single day, and all of a sudden the top 3 positive contributors were banks, as Bank Nifty increased near 700 points, and the fourth and fifth one positive contributors were IT stocks. You might ask what changed now, how banks became positive. We know and we discussed earlier, yesterday the global momentum becomes crazy positive due to the Fed FOMC member statement related to rate cut. As soon as that release, first HSBC's chief economist made the comment that this rate cut cycle and drop in 10-year bond yield will be more positive for Asian banks, especially to banks in India and Indonesia. And also global rating agency Fitch, they also released the report that they expect positive outlook on Asia Pacific banks, especially the ones in India and Indonesia. So on the same day, two very important global companies made the positive statement about Indian banks. I think that propelled the positiveness on banks yesterday. In addition, Axis Bank Mutual Fund, subsidiary of Axis Bank, launched a new scheme called Manufacturing Fund, which expect to get new fund for at least 2,500 crore rupees. In that launch statement, they mentioned at the beginning of this year, Axis Mutual Fund got the assets under management of 2.25 lakh crore rupees that they are expecting to increase 3 lakhs crore rupees by end of this fiscal year, which will be 33% growth in 1 year, which is massive. This launch and the statement made the Axis Bank to rally over 4%, but in the end it settles just below 4%. So those were the things I like to highlight about yesterday. Now for today, first, let's look at the positive, and there are two potential huge negative as well. Positives. Last night, Fitch affirms the A rating with stable outlook for TCS, which is really good. Second, JP Morgan mentioned a overweight rating on Reliance Industries with a target of 2,810 rupees per share. And in the report, they explained all the rationales behind why they think it's positive, etc. So, those are the positives. Now, negatives. Two global companies, one CLSA rating agency, other SocGen, French financial company who got the assets under management of over 1.5 trillion US dollars. Both downgraded Nifty to neutral from overweight, citing the 2024 election uncertainties. In case of CLSA rating, they went one step above and suggested Nifty 5% downside with a target 18,730 in December 2024, despite they agreed the fact earnings will increase around 15%. Anyway, those were the negatives. As a summary, US market closed flat to mixed, but now US future market is trading positive, so global momentum is okay. However, Indian IT ADR, Gift Nifty for now all indicating the flat to negative opening. However, have to be little cautious. As I said, two global companies downgraded Nifty, but still there are stock specific positives. I know it's a lot and confusing, but I don't want to miss any. Anyway, moving on. As per stock open interest, Z Entertainment Enterprises, Hindustan Petroleum Corporation, ONGC, IDFC First Bank and Info Edge got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, NTPC, Bandhan Bank, Motherson International, Hindustan Copper, L&T, ITC and Colgate Palmolive got an increase in open interest with a positive price close, indicating long build-up. About the things to look out, early morning, Japanese industrial production growth, retail sales data and Chinese PMI data are due to release. Then during our market time, Germany's unemployment rate. And in the aftermarket hours, first 3:30 p.m. Europe inflation, then at 5:30 India's Q2 GDP data, and at 7 p.m. US PC inflation data. These are the some items we need to keep an eye out today. Then in case of institutional activities, as a third consecutive session, FII was net buyers. However, yesterday they only bought for just 72 crore rupees. In case of DAI, they net bought significantly for 2360 crore rupees. Coming to technical, Nifty opened a gap up of 80 points at 19,977 and throughout the day it keeps on increasing. First moved above 20,000, then above 20,100 and settles around there. Thus, on the daily chart, it formed a long green candlestick pattern with minor upper and lower shadow. Technically, it had a decisive upside breakout above 19,900. So, all the known technical indicators indicating a positive momentum. Seems Nifty is climbing towards the all-time high value it reached on September 15th, 20,222. So, that's now the immediate resistance. If it's broken, then 20,340 will act as the next resistance and the immediate support is present at 19,900 to 19,800. In case of Bank Nifty, no difference. It opened 200 points gap up and rallied to 685 points. Thus, on the daily chart, it too formed a strong bullish candlestick pattern. Here also, it had a breakout opening from the downward sloping resistance trend line between September 15 high and November 16 high. And also another positive, throughout the day it maintained above the 44,000 mark. So as per technical, currently it's in a strong buy mode with a solid support base in 44,300 to 44,200 zone and the immediate resistance is at 44,700. On the options front, the maximum call option open interest was at 20,200 strike followed by 20,100 and 20,300 with new maximum call option writing at 20,200 then followed by 20,300 to 20,400. Thus, from the options data, it's indicating 20,200 is expected to be the resistance area. Whereas the maximum put option open interest was at 20,000 strike followed by 19,800 with new put option writing at 20,000 and then 20,100. Hence, the immediate support is at 20,000 to 19,800 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers educational purpose only. Thanks for watching.